Good afternoon, EC Youth. My name is Michael Hernandez, and I am here to talk about investing. There is a saying that goes, when is the right time to plant a tree? The best time was yesterday, the next best time is today. The same thing goes with investing. The best time to invest was yesterday. The next best time to invest is today. The reason why we need to focus on investing as early as we can is because time in the market beats timing the market. But Michael, what is the thing that we need to invest in? Great question to ask. Let's go look at our fishermen and how they fish so that we can get a better idea of what to invest in. Let's think of the fishermen that catch a lot of fish by throwing a net. They get more fish because they throw a net than they do by doing the fishing rod. Why? Because the fishing rod can only catch one fish at a time. The same thing goes with investing. Instead of throwing your fishing rod towards one or two stocks like Apple, Microsoft, Chipotle, Gucci, you would rather throw in a net and catch the entire stock market. So what is this net for the stock market? They're called exchange traded funds or ETFs, and they allow you to buy one stock that mimics the entire stock market. Why buy into the stock market in its entirety? Because on average, the stock market makes about 7 to 9% in returns year after year. So after 1 year of investing within the total stock market, for every dollar invested, you make 7 cents. For every $100 invested, you make $7. And for every $1,000 is $70. And if you now include that over multiple years, that interest can compound on itself and make you more money. And that is why time in the market beats timing the market. This particular talk is not here to force you or to prescribe to you to purchase a certain type of stock or ETF. When you do decide to purchase your ETF, think about one that mimics either the S&P 500, the Russell 2000, the Dow Jones Industrial Average, or the Total Market Fund. There are also ETFs that have less volatility, which is the variation between high and low prices, either day to day, month to month, year to year, and those are bond ETFs. You can have ETFs that mimic municipal bonds, corporate bonds, or federal bonds. And bonds and their ETFs are a great way for people who are nervous about losing their money. So how much do you put in towards the bond ETFs versus a stock ETF? Well, the way that you will look at that is how far away are you from retirement, or how risk averse are you? And risk aversion is how much money are you willing to lose? So are you someone who likes to go skydiving like I do? If so, you might take a little bit more risk with buying more stocks than you would bonds. In conclusion, how risk averse are you? That will tell you how much you want to buy in bonds versus stocks. Cast your wide net versus fishing for particular bonds or stocks. And remember, time in the market beats timing the market.